What is going on, everybody? Welcome back. So in today's video, we are going to talk about an article that was recently published by Citigroup and how it affects Nvidia and also how it affects the entire chip sector. But real quick, guys, I have two things I want to talk about quick. So first of all, guys, I have a dividend capture trade that I plan on making next week, and I just want to share that with everybody. I think it's a good way in a volatile market to make some really good passive income. I have had really good luck with it this week so far. And also, guys, if this is your first time to the channel, make sure to subscribe and hit the bell for all notifications. So most of you are probably familiar with Citigroup. I actually hold a small position in Citigroup. It was part of my 3 stocks to buy in December. So anyway, Citigroup come out and they said to make Nvidia part of your holiday shopping list and that a bottom is forming into the chip stocks. So of course they talk about Nvidia shares, how they've gotten beaten down so much in the past couple of weeks, and then admit it was still suffering from a prolonged crypto hangover. Citigroup is arguing that the sell-off has created an attractive entry point, and I do agree with that. I think that at Nvidia's current price, it is a very attractive entry point. Once we get through this article, guys, I will tell you my favorite method right now to play the chip sector and Nvidia. Let's just move on with the article though. So Citigroup mentioned that they're adding it to their Christmas shopping list, okay? Writing that the explanation for the company's gaming business have been de-risked going into January's quarter, and that Nvidia is picking up market share in GPUs. Now this is the part right here, guys, that I really agree with them, and again, this is why I reiterate how important it is to have Nvidia in your portfolio. This sentence right here says that he remains upbeat about long-term trends in artificial intelligence, esports, and self-driving technology. So keep that in mind. You know, it really bothers me when I hear people say all Nvidia is a graphics card company, because there's so much more than that. Okay, as we advance in artificial intelligence, cloud computing, esports, and self-driving cars, Nvidia is going to play a huge factor because they are so far ahead in all of those industries, okay? That's why you want Nvidia in your portfolio, for what it does now, but also for what it's going to do in the future. And this analyst also goes on to say that he sees general opportunities for bottom picking in the chip sector amid a weak spell of late. He argues that a bottom is forming in semiconductor stocks, which could be a good entry point into high quality companies where street estimates have been cut sharply. So back in November, guys, I published this video right above me, and it was a stock analysis video, and it was the cold hard truth about Nvidia. So in my opinion, I do not think the bottom has set in just yet for Nvidia. I hope it has, but I'm still think we probably have a quarter or two possibly to work out all of the crypto numbers. So we all got to keep in mind too, not only does Nvidia make these products that are so highly in demand, not only are they tapping into all the industries of the future, let's keep in mind how fundamentally great Nvidia is, okay, guys? I'm just going to go over a couple of the fundamentals real quick, guys, but they have a forward P of 20.47. Now, right here in the profitability, guys, profitability and management effectiveness, this is really what should sell you on Nvidia, should sell the investor on Nvidia. So look at these: 37.79% profit margin, 36.89% operating margin, 24.39% return on assets, and 59.32% return on equity. So it's fundamental gold. We'll jump right over here, guys, and even through the end of November, which was far after the earnings report, there's still only about 2% of the shareholders are holding Nvidia short, okay? You know, you're getting 20.7% quarterly revenue growth, and you're getting about 46.8% quarterly earnings growth. And last but not least, guys, the balance sheet. Okay, Nvidia will be okay. Obviously, like I said, I know that the price of the stock has dropped dramatically here lately, but even if we do experience a recession, Nvidia will be just fine, and this is why right here: $7.59 billion of cash and only $1.99 billion of debt. So Nvidia has got their act together very well fundamentally. And so you take that, guys, and you couple that with all the awesome things they have going on, you know, for the future. Like I said, as we shift more into autonomous vehicles, as cloud computing becomes even bigger, and of course as artificial intelligence progresses more and more, I see Nvidia as a must-own stock. But again, I just want to reiterate, I don't think we've quite seen the bottom just yet. That's why I want to talk about the method I use currently to play Nvidia. So I think really, guys, the best way to take a position in Nvidia is to use M1 Finance, okay? So you can basically deposit any amount of money you want. You can invest $20 at a time. You can invest totally on a fractional share basis, okay? So Nvidia's trading at $146 right now. You would not have to buy a whole share. You could buy a half a share. You could buy a quarter. Like I said, you could spend as low as $10 on a position in Nvidia and keep buying it every time it drops, okay? So that's currently how I'm investing in Nvidia, but this has proven to be a really good method, like I said, to keep lowering your cost basis and at the same time not spending an arm and a leg, on each individual share. You're not going to catch the bottom on these stocks. If it's not, even the bottom hasn't set in the chip sector, you got to keep in mind, the market's in really bad shape right now. So it's very difficult to even know or even try to guess where the bottom of these stocks are going to be. So I use M1 Finance. I think it's a really good tool, like I said, for lowering your cost basis and buying fractional shares, and there's absolutely no fees. There's no fees at all. I'll have a link down in the comment section, guys, if you want to sign up for M1 Finance, and you will get $10 free of stock when you fund your account. All right, guys, so now let's talk about the ex-dividend trade that I want to make for next week, okay? So earlier in this week, I made a video, and basically all this video was talking about was how I plan to swing trade and day trade some stocks just to take advantage of the ex-dividend date. Okay, so for those of you who don't know, if you want to qualify for a company's dividend, you have to buy into the stock the day before the ex-dividend date, and then you can actually sell on the ex-dividend date or any time after, and you will receive the dividend payment. So the stock that's on my radar for next week, guys, is Broadcom. Ticker symbol AVGO, okay? Now this is a big chips maker too, guys. They've recently had a really good earnings report with really good guidance, and they even upped their dividend to $10.60 yearly, okay? So their ex-dividend date is 12/18 of 2018, okay? That's actually Tuesday. So we would have to take a position in Broadcom on Monday in order to get the dividend. The cool thing is you will get $2.65 per share, and that will be on the 28th of December. Right here, your payment date, that's when you'll receive your payment. And of course, like I said, just make sure if you do want to take advantage of this that you buy the stock on Monday. Okay, so then you could sell it on the 18th during the trading day if you want to, or you could continue to hold it longer than that. But you do have to own the stock the day before the ex-dividend date to qualify for the dividend. So like I just mentioned, guys, Broadcom just had a killer earnings report, and they had a huge guidance increase, and they even upped the dividend. So Wall Street is back to being very bullish on Broadcom, and it was actually trading over $260 a share this morning in the early morning hours. Got up as high as 260, 261, and then it traded down with the rest of the market during the day. So I think this is an ideal entry point. Of course, I did not buy it today. I do plan on buying it Monday. I will probably set a limit order for somewhere around 253 to 254 just to hold the stock long and also to qualify for the dividend payment, okay? So let me give you an example. If I buy into Broadcom at $253 and it trades up $1 on Tuesday, I will probably sell and try to move into another position. So I'm not looking for a big return here. I already own Broadcom in an ETF I own. I just want to take advantage of the ex-dividend date. That's my plan for Monday, guys. Like I said, analysts have upped their price target a lot on Broadcom. I've seen a lot of them at 300. I've seen several at 325, 350. So Monday morning, I will be watching the market pretty closely and taking a position in Broadcom. And like I said, you'll get $2.65 per share payout on the dividend. But anyways, guys, that's all I've got for today. Thanks for watching the video.